Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, massive red flag with the job numbers this week. We're going to go over the data, but you're not going to want to miss this video. It has big implications going forward. So let's dive in.
Trade Genius.
All right, Bob. So heavy economic data week this week. We got more tomorrow, but we got to talk about this jobs data because it really, I think, is very concerning what has come out in the last couple of days.
I think, and we're going to show you a chart here in a second that, basically the jobs are going poof and job openings have collapsed right now. And I think it goes to the same scenario that we've been talking about all year is that we never really came out of a recession, Phil. And now we're getting close to the end of the year and companies are like, dang, we're not going to make our numbers and we're not getting any sales. So they take the easy route and they start blowing up employment. Look at the job openings year over year on this chart.
Yeah.
SPY follows it, Phil.
Yep.
And I think people, always look at the unemployment report, but that's lagging. You need to have the job openings, which is leading.
Right.
And we have basically a divergence here that's going to snap shut because we're not going to get all of a sudden more job openings coming. As you can see in the marketplace today, more and more larger companies now are starting to blow up.
Right. And then I think you were saying too, this next chart is quits is dropping. And what does that mean?
Yeah. So, there's always, is there leverage or not leverage? We've been hearing all along here because of demographics and people don't want to move that people are just quick to just quit. For the longest time since the pandemic, people had a lot of leverage. And that leverage is going away. I mean, look at the job openings in this chart are collapsing, but the quits are falling too, which means people aren't so quick to say sayonara to their boss. And the leverage is starting to swing back. And as you know, we're starting to see more and more corporations starting to say, hey, you're coming back to the office now.
Right.
And if you don't, good things are not going to happen to you. And so I think we're starting to see that turnover again into who has the leverage in the market. And it's going back to the employers.
Right. And then the ADP numbers came out. I guess we could slide into that chart. And, it's just a big, for me, what jumps out at me here is not only do we have a sharp drop off, it's happening in Q3, which I don't like. If we get sharp drops in Q3, I think it doesn't bode well for Q4. Last time we had a drop like this at this point in the year was 2018. And, you can go back and look on your daily charts. The S&P 500 had a terrible drop in the end of 2018, bottomed out into the beginning of 2019. Could be a similar scenario. And 2019 was the year prior to the COVID flash crash. And we noticed the Fed was doing some interesting things like reintroducing the reverse repo window, which you only saw in times of distress. And that's, I remember that happened in September, October of 2019. And the jobs data, as you can see here, was negative. So we have to keep an eye on that because I think as this drops and if we go negative on the ADP employment change, you're at a big risk, I think, for this market finally catching down to all of that data that we've been seeing, right? All of the, manufacturing data, retail sales data, it's all now in recession territory. And we're going to actually probably get into that data in more detail tomorrow or Saturday. But yeah, Bob, I just don't like this setup here. The ADP rolling over in Q3. I just don't think it's going to give us a very rocky Q4 in all likelihood.
Yeah. And these are long swing data points too. It's not like companies decide willy-nilly to hire and fire. And the fact that they're coordinating now, I don't mean coordinating in a monopolistic sense. I mean that it's converging, I should say is a better word than coordinating. All of a sudden, you've seen a lot of convergence of companies saying, hey, economic activity is not supporting the amount of employment we need. And remember, a lot of these companies doubled and tripled up on people because they were worried about the pandemic and make sure they have enough people. And now they're at the point now where like, hey, I think we have redundancies here and it's going to start to really bite. I feel really bad for what I would call the low IQ industries, the ones that don't require a lot of skills to do, you're gonna see those jobs get just wiped out, and they're not coming back, Phil. My biggest worry about this recession is that this is going to be secular in the sense that every retailer in the country is going to change their business model based on the behavior of the shoplifters.
Mm-hmm.
And how unsafe it is in a lot of places in the country. They're not going to subject their assets for seizure by the mob.
Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
And you're going to see that a lot of these jobs are never coming back ever. And I think it's going to be really, really sad, but it's going to push this recession out a couple years until and unless you get enough people retiring or you get some sort of new nirvana kind of positioning. But look, AI and machine learning are just going to take probably more jobs away too. So it's going to be really interesting to watch.
Yeah, I mean, the title is not really a joke. I mean, this is going to ruin careers. Some of them will not come back. And I agree that AI, and that's why you can't ignore the AI play. And ultimately, I think NVIDIA on the next cycle is going to be a monster play, especially since they are kind of the Google of chip making for that stuff, that architecture. NVIDIA has been the bleeding edge on that stuff. So you have to, I think you have to get positioned for that. Now, that being said, is all that stuff, and are we currently in a bubble? I would say so. And I say that this market has a lot of catching down to do to the realities of this data. But again, sometimes the market, can get dislocated. You hear the term, the market is not the economy. And that's why we do get these dislocations. But ultimately, though, when we do roll over and start getting our contractions in the various numbers, and like I said, we'll go over that in more detail in the next couple of days, the markets do eventually snap back down to that, and those alligator jaws in the data do close. So I think, we just have to be defensive going forward, especially into the end of the year here. But I agree with you, Bob. I think that things are going to change going forward. It's funny because COVID changed a lot of things in terms of efficiencies, and I think people being able to work from home. And I think going forward, I think that'll still stick around to a degree. They found areas where you don't have to have office space to get certain things done. But I think by and large, I think the landscape is going to change again through this cycle. So it's very turbulent, right? Go through COVID, we got changes. We're going to go through this AI transition. That's going to make things more efficient. So the job market is going to be a pretty tricky one, I think, going forward.
Yeah, I totally agree. And just so you guys know too, is that, we're leaning bullish. Phil's a little bit more bullish than I am going into OPEX. I'm bullish going into next week. But look, energy, precious metals, and the markets are really moving right now. And I think we're going to get that push into the Fed meeting and into OPEX. And then after that, I think disappointment reigns. So for the trolls out there, we're macro bearish, but we're trading this thing long, and we're ready to pivot as the market responds to the data. And look, we told you guys about TLT. It's up 2% in the last 3 days. So big money's starting to sniff in position, but it's a process, Phil. And I think over the next 2 to 3 weeks, I think we're going to see that process unfold.
Yeah. So for me, a couple quick data points on levels. One for Bitcoin, it dumped today. It lost the 27K level, which I thought was important. So now I think that opens us up to probing actually below 25K. It opens that entire range back up. So to the upside here, 26,600 to 700 area is very important, I think, for a reaction to see what happens there. If they get that, it might be able to push back up over 27K. That'd be very important for the bulls. Otherwise, like I said, you're probably looking at a sub 25K move. As far as the S&P 500, bulls have been pretty resilient here. And I think that your antennas go up if we lose 4,500 on the SPX. And then if that, you can get a dip under that, but it needs to get back over that if we are going to rally into OPEX. Otherwise, if we don't get back over 4,500, then I think that opens us up all the way back down to 4,400. But the second half of September, I go from short-term bullish back to macro bear, because I just think at that point, with all the things in play, we got some serious headwinds for Q4 here, Bob.
Totally agree. Hey guys, if you like what we're talking about, hit like, subscribe, tell your friends, hit the notification button. If you want to trade with us, more and more of you are, go to tradelikeagenius.com. We've got great specials running, and what we charge for our service is nothing to what you get out of it. And we'll definitely give you tools that you can become an effective, independent trader over time. So, come check us out. And Phil, hey, thanks for everything. We'll see you guys tomorrow. We got some really cool stuff tomorrow and for the weekend. It's a data-rich environment. It's going to be tremendous opportunities for us going forward, and we want you guys to know what they are. So thank you. Thanks, Phil.
All right. See you guys tomorrow.
Trade Genius.